Okay, traders, welcome back to the Price Action Labs YouTube channel. So in this video, I'm going to be going over a topic which I think is important. It's understanding the difference between a low probability setup and a high probability setup, right? So a lot of the times we take setups, and a lot of the times they seem to work, sometimes they don't work. And what we often do is we blame it on our psychology. And one thing I want to make clear is that when you are trading, right, psychology comes from a lack of understanding your technicals. It's not the other way around. It's not like you need to improve your psychology and then learn the technicals. No, you need to understand the technicals so you can then apply the correct concepts, which will then bleed to correct psychology. So, what I mean by that is, we're going to be going over basically the price action from the entire week, starting with Monday, the 28th of April, all the way till the Friday of the week, right? So we're going to be going over the best day to begin with, which was actually Monday. Monday gave the best trading opportunities. I caught this short position here with the community on Monday, the 28th of April. And so, what you're looking for, when I look for an A plus setup, what I'm typically looking for is a few things, right? So, let's quickly get rid of that to avoid confusion, right? So, I look for fair value gaps, I look for power of three, and I look for order flow, right? These are the most important things I look for. So, these are the three things I look for in every single setup. So, if you're trading ES, this is ES on the 15-minute time frame, right? What makes a high quality setup? So, there's a few things that make a high quality setup. So, first of all, I'm looking for a liquidity sweep. Now, what do I mean by liquidity sweep? Liquidity sweep basically means the previous day high. So, I want to see the previous day high getting swept like this, and I want to see price trading above the previous day high. When I see a previous day high sweep, right, this is one of the highest probability likelihoods of a good bearish day playing out, which is exactly what we had over here on Monday, the 28th of April. So, a high probability trading condition often comes down to a liquidity sweep. What are we looking for in terms of sell side liquidity being swept or buy side liquidity being swept? So, in this case, when we look for a high of day, if you know where the high of day is going to be, or you're quite confident with where the high of the day is likely going to be, your chance of actually making money in trading significantly increases because you're on the right side of the market, right? So liquidity sweeps are the most important thing, right? I always use the Asian range as an accumulation, and I want to see price significantly above the Asian range, right? This also means, now this is coming on to step number two. Step number two is I am using the PO3. So if we just go up to the daily, if we just try to kind of change this is the PO3 power of three. I use the New York midnight opening price. So what we can see, if I just kind of replay price back a little bit, what we see over here is we can see prices significantly above the daily opening price, where we can see we've had a bullish day and we've had a bearish opening. So this is 15 minutes into market open. So when I'm looking for trades, right, the first thing I want to look for is a liquidity sweep of the previous day high. The next thing I'm looking for typically is a fair value gap, right? And this is the next thing we're going to kind of come into. So we're above the daily opening price and we've taken out the previous day high. So this alone gives us a standalone kind of condition as to where we want to be looking for sells. So right now, what makes an A plus setup is first of all PO3, right? We're significantly above the daily opening price, right? So just to make this kind of clear for everyone, this is the daily opening price. We're way above the daily opening price. We've now come into a fair value gap, right? This is a 5-minute fair value gap. For those who ask my time frame, I use either the 15-minute or the 5-minute. So when you're trading, you need to know what we call the where, what, why framework, right? Where are you trading from? Then what are you looking for? So this is the next step, right? Where you're trading, you need to be trading above the daily opening price. You need to be trading at a fair value gap. So if you don't have your where, your what and your why become very difficult. But once you have your what, the next thing is sorry, once you have your where, the next thing is the what. So you need to know what you are looking for. So when price comes into a fair value gap, you want to ask yourself the following questions, right? Are we bullish or bearish, right? What are you looking for? So this is where the ATAS platform becomes very helpful, right? So the ATAS platform, again, ATAS, Advanced Trading Analytical Software. This is the same price action. So again, quickly, we've swept Friday's high, and now we've come to this area over here. So just without even kind of looking at any entry models, right? What we're seeing is a few things over here, right? We have a red candle resting over here, right? Notice how this red candle had a huge amount of buying at the top, right? We don't have to read every number. In fact, you shouldn't be reading every number. That's going to fry your brain. What you need to look for is when you see a red candle, you need to look and see what was actually happening inside of that red candle, right? Were the buyers aggressive? Were the sellers aggressive? And so if we look over here, we can see this red candle was very, very interesting, where at the top of the red candle, we had a significant number of buying. Notice how we had 529 for 1,000. We had a 0 for 10 at the top. So we saw a finished auction. We saw a ton of blue delta, which represents aggressive buying. And we saw a large buyer step in over here. We saw 1,000 aggressive buyers for only 529 aggressive sellers. Despite that being said, the market was able to find what we call, this is an area of resistance. This is a true area of resistance. So when we go back to the candlestick chart, what the candlestick chart is representing here is that this is the same price action over here. So we saw a huge amount of buyers in this area. Now, did buyers succeed at driving price higher? Well, no, because it broke structure to the downside. And this is the next thing I want traders to understand. When you are looking for a market structure shift, right? This is your market structure shift, but you need to validate what's going on over here, right? So the circled region I've given you corresponds to what you see over here. This is that circled region. We saw buyers step into the market. Buyers were aggressive, but were the buyers rewarded? Well, the answer is no, because we saw the market shift structure to the downside. So from here now, we can see inside of the we can see inside the local price action, this fair value gap is a high probability fair value gap. So a lot of the time when traders talk about their psychology, talk about their emotion. They talk about how their emotions hijack their trade. When in reality, your entry model and your strategic plan isn't correct. And there's easy ways to fix that, right? So first of all, you want to be looking for a liquidity sweep. So if we go back to the ATAS platform, what you want to be looking for really is you want to be looking for a liquidity sweep. So in this sense, what's going on is we have the previous day high over here. That was swept over here. Notice how we had a lot of buyers that were trying to drive price higher and they failed, right? Notice how also we are above the daily opening price, right? The daily opening price being all the way down here. So when you're above the daily opening price, this is what gives you indication to sell, right? And so again, what's really obvious, what's really nice about this trade is that you could have basically taken it just like this. Now, I don't personally trade this way, but you could have had a limit order at this fair value gap with a stop loss just above the fair value gap, and you can target the daily opening price, right? That is one way you could have taken this trade. Now, this is not my preferred way to trade. Of course, we had, I do like to look for more confirmation in the markets. The confirmation you're looking for really comes within this region, right? So this is the yellow region over here. So I'm going to change this in yellow. Now, I always talk about order flow. If you want to read fair value gaps correctly and you want to have a high strike rate above kind of 50, 60%, you need to understand what is going on inside of the fair value gaps. And it's basically what was going on over here. So we saw buyers fail over here, which means sellers are in control, right? I'm going to write PS. Passive sellers are in control. Now, this fair value gap held only because passive sellers were in control. And so when we go to the ATAS platform, if we kind of draw this out side by side so people can understand what's going on, the ATAS platform itself, very, very powerful tool. So if we bring that up, the ATAS platform, we saw a lot of aggressive buyers in this area and we saw a lot of aggressive buyers. So these are the aggressive buyers and the market was unable to break higher. This shows you by default that sellers are in control, right? Sellers are in control in this area. So when you're forming an A plus setup, you basically want to be trading off a fair value gap above the daily opening price. That is what makes an A plus setup. And now we're going to compare this setup to a setup that isn't very good. So when a setup isn't very good, you are typically going to have choppy price action. And here we're going to go over an example. So this is now Tuesday. And I want traders to understand what was going on Tuesday. Again, one thing you need to understand, when the markets are choppy, it's very easy to blame your psychology, when in reality, it's you that needs to know when to stay out. So above every psychological flaw comes discipline. And discipline will come in the form of staying away when price is choppy near the New York midnight opening price. So this is the daily power of three. I want traders to understand that this here is the daily candle basically in line with the PO3. So if we just kind of play price on a little bit further, right, what we're seeing is we're seeing pretty horrible price action. Again, when we go to the 5 minute time frame, it's the same, right? Those people who are trying to trade this price action, it is very choppy. You see up and down moves, right? I used to burn a lot of accounts in this particular price action, right? And the reason for that, you don't have to burn so many accounts in this particular region. What's going on here is that price is oscillating near the daily opening price. So this is the daily opening price just over here. This is the New York midnight opening price. So this corresponds to 5 a.m. UK time or midnight Eastern Standard Time. So if you can see price being in a very, very choppy range over here, if you're near the New York midnight opening price, guess what you do? You don't actually trade. You don't click buy or sell because One day you win, one day you lose. So if your psychology is off, it's often where you are trading from, not your actual entry model. And this is something traders need to understand. Traders need to understand daily market conditions. And if you are near the daily opening price, your chance of running into a choppy market is very high. And trading choppy market is very difficult regardless of how you trade, right? Regardless of how you trade, the markets will be choppy in some days. Now, going into Wednesday, for those who are swing traders who want to kind of handle their 9 to 5 jobs while trading, Wednesday is one of those days where it really did, the market really did provide, right? This is where I kind of show the weekly opening price or the weekly power of three, right? The weekly power of three is very, very powerful for those who are in day jobs, right? Day jobs or 9 to 5 jobs. Basically, the low of the week will occur below the weekly opening price. That's obvious. So this is the weekly opening price over here. Notice how we've taken out Monday's low and Tuesday's low. So this is basically liquidity. The low of the day forms typically on a Tuesday or a Wednesday. So in this case, it happened on a Wednesday. Again, major liquidity sweeps. If price has taken out a previous day low, or in this case, multiple lows, right? We saw Monday's low and Tuesday's low being swept, right? From here, it's pretty simple, right? You can bet that Tuesday or Wednesday is going to be the low of the week. And so if you're a swing trader, you can just ride the move up while you're at work. So you can make thousands of dollars just by pressing one button a week if you know how to time the market. So you want to be buying below the weekly opening price. You can safely have your stop loss here. Again, what makes a safe stop loss from a swing trading perspective is that you have, right? You have taken out the previous day lows. So once you take out the previous day low, you just want to target the previous day high, right? Or you want to target slightly above the previous day high, usually a 1 to 2 or 1 to 2.5 during the uh kind of the trade plays out for 1 to 2, 1 to 1.5, 1 to 2.5, depending on the size of the stop loss, right? So again, high probability trading conditions come from understanding where the liquidity sweeps are. So if you're trading an inside day, likely that the chances are you're trading near a New York midnight opening price, or you're trading before a liquidity sweep, right? Neither of those are ideal conditions, right? So if we just kind of play price on a little bit more, I want to show traders what it's like on Friday, because Friday was one of those days where staying cash was king, right? So again, if we kind of change our PO3 settings, notice how we keep going back to the PO3, because it is the PO3 that's making this video, to be fair. So if we go to the kind of the 4 hour, sometimes you need to know where the markets are choppy. So if we go to the 5 minute time frame, again, understanding choppy markets are very important. We had a quite horrible price action over here. This was now 5 p.m. UK time, which corresponds to about 12 p.m. Eastern. So 12 p.m. Eastern, you don't want to be trading past 12 p.m. Eastern, especially on a Friday, right? So keep your trading to the AM session, and you need to understand the AM session here was pretty rough, right? So the way, how can you predict if the market is going to be a rough session or not? Well, I like to use the PO3 just to my advantage, right? That's one thing I often like to do. So if you look at the PO3, a 4 hour PO3, especially for intraday trading, if you look at the 4 hour PO3, if we kind of replay price a little bit to, let's take price back to kind of here. So this is 11 a.m. Eastern, right? So one thing I often like to do is you can see the market opens over here, right? Market open 9:30 Eastern. We can see no fair value gaps forming in the first hour to 2 hours. Not a single 5 minute fair value gap formed over here. Also, notice how we're above the 10 a.m. Eastern. Of course, when you're above the 10 a.m. Eastern, you don't really want to be buying, even though the market did move up. You don't really want to be buying. And if there's no fair value gaps in the first kind of 1 to 2 hours, this is after 1.5 hours, you want to avoid choppy price action. So the purpose of me making this video was just to kind of clarify the topic of, yes, emotions are important, and emotions do play a part, but the reality is, if you don't know when to kind of control your impulses with basic technical analysis, if you don't know where the orders are aggressive, where the orders are passive, if you're not using the power of three, if you're not using liquidity, your emotions don't mean a thing. Right. And I don't mean to be harsh, but you need to understand your strategy, where to get in, where to get out before you even consider going to psychology.